Investors seem to be breathing a sigh of relief that the Republicans only lost control of the House of Representatives and not only retained control of the U.S. Senate, but actually increased their majority. I think the feeling is that even if we have a bit of gridlock for the next 2 years, that the economic boom that began when Donald Trump was elected will continue during the next 2 years, and maybe the president is going to be well positioned to win re-election and maybe take back the House of Representatives in 2020. However, I think investors are once again being much too complacent. They are confusing an economic boom for a bubble, because that is in fact what we have, and the air is already obviously coming out of this bubble. But the problem is, since so few people actually understand that we're in a bubble, they don't understand that it's popped, and they don't even hear the sound of the air coming out. But if you look around, you see all sorts of indicators that are very reminiscent of 2007, 2008, just before the bottom dropped out of the economy and the markets. If you look at the housing data, it hasn't been this weak since 2007, 2008. Home builder stocks are collapsing. Real estate, homes are just piling. The inventories are piling up all over the country. It's only a matter of time before prices fall through the floor. Look at what's happening in the auto sector. People are still looking in the rearview mirror and thinking that there's a boom, and they don't realize that they're staring a bust right in the windshield. Meanwhile, I think that those people who think that gridlock will end up being good are mistaken. I think we're not going to have gridlock, especially when the economy moves into recession, as the stock market moves into bear market. I think President Trump will be working with a Democratic Congress to pass the next round of economic stimulus. And I think when the stimulus has to be done with the cooperation of the Democrats in the House, it is going to be a much more Keynesian-style stimulus that has a lot more government spending than would have been the case had it simply been an all-Republican stimulus. So I think there'll be much larger deficits associated with the next stimulus. There will probably be some tax cuts as well, but they will be targeted just to the lower income and the middle income taxpayers. Maybe stimulus checks will be mailed out directly to taxpayers, but there will not be any reductions in the marginal rate of tax. In fact, there may even be some increases in the corporate tax, as the Democrats will be blaming the collapse on the tax cuts and the deregulation that happened prior to their taking the House. In fact, I do believe that the 2020 election is not going to be about who gets credit for the economic boom, but who gets the blame for the economic bust. But in the meantime, if we're going to have even bigger deficits and an even more inflationary stimulus with a Democratic Congress, that means the move in gold and silver is going to be even larger. You know, the price of gold now is trading around $1,220 an ounce. We have been basing a little bit north of $1,200. I don't think there's much downside risk from here in the price of gold. I think there is tremendous buying below $1,200. If we even get down there again, I don't expect it to stay below $1,200 for long. You have major buying, not only by investors, but central banks who can see the writing on the wall. The dollar's days as the reserve currency are numbered. It's amazing how many people haven't connected the dots between the rate hikes that we have today and the rate cuts that we're going to see tomorrow, because all of these hikes have simply pricked the mother of all bubbles. This bubble is bigger than the housing bubble and the stock market bubble. In fact, even the housing bubble we have right now is bigger than the one that popped in 2008. The reason is that interest rates have been kept much lower for much longer, and so the market has been far more distorted. And it's not just the residential market, it is the commercial market that is going to be particularly vulnerable. Although one of the things that mitigated the collapse of the housing market last time was the influx of institutional buyers who were buying up single-family homes and renting them out. That kind of put a floor beneath the market. I don't think those buyers are going to be here when this bubble deflates. In fact, I think they're going to be selling. As interest rates go up and their rental income is inadequate to cover these higher costs, I think the institutional home buyers are going to become sellers, and they're going to be competing with individuals trying to unload homes they can no longer afford, and the banks trying to sell homes that they have already foreclosed. So this is going to be a major real estate collapse, a stock market collapse. The Fed is going to be going back to zero. Obviously, they don't see this coming yet, just like they were oblivious to what happened in 2008. They will reluctantly or belatedly slash interest rates and relaunch quantitative easing, but they're going to be very surprised by the results. Rather than another bubble that lifts asset prices, the only prices that are going to be going up are going to be consumer goods as the dollar collapses and the cost of living goes through the roof for Americans. This is not going to be the third time's the charm when it comes to the Fed and their monetary magic. It is, as I've been saying, 3 strikes, you're out. But if you want to avoid going down, you need to protect yourself. You need to preserve your wealth. You need to buy gold and silver, and you need to buy it now. The sooner the better. I think the upside is tremendous. You have a tremendously mispriced asset right now because so few people perceive the dangers that lie ahead. It's the same people who couldn't see the crisis coming in 2008 that are equally as blind to a larger crisis that is staring them in the face. And that's because they never understood why the financial crisis happened. And that's why they think the Federal Reserve solved the problems. They don't realize that the Federal Reserve simply made the problem that they created worse. We kicked the can down the road in 2008. We finally caught up to that can. The problem is it's too big to kick. If they try, they're going to break their foot. I think that the Fed is going to lose control of the long end of the bond market, even though they're going to be slashing rates and printing money to buy up bonds. I think long-term interest rates are going to rise anyway. There may be a knee-jerk reaction where the initial move is down, but then rates are going higher as investors dump treasuries and the dollar together. It's going to be, I think, the perfect storm. This is stagflation, except now that we have the Democrats in Congress, I think we're going to have even more stagnation and even more inflation than it had it just been the Republicans. But of course, the scariest thought of all is that the Republicans and Donald Trump take the blame for this train wreck, and that the solution that the American voters grasp for is socialism. The Democratic Party is already now the Socialist Party, and several socialist candidates were elected. This time, I think they'll be a lot more successful with their message in 2020 when the economy is a disaster, when we're in stagflation. And so before that happens, you want to make sure that you've bought as much gold and silver as you feel is appropriate. If you've been waiting for a time to add to your position, don't wait any longer. Buy now. If you haven't bought any gold or silver, now is the time to start buying. Talk to some of my representatives at SchiffGold. We've got the best prices online, and we'll make sure you get the right gold at the right price.